Hi, and welcome once again. Today we have another topic, and we are still speaking about the power of money, because money is what makes or breaks our lives. So we spoke about saving, and we just completed budgeting last week. Today we are going to speak about debt. I know debt is a very, very controversial topic, because most people, yes, say you must take debt, or you must actually have some loans from somewhere to actually make your life better. But does it always make your life better, or it can actually make your life worse? When you go to a bank, you take up a loan, it all depends on how you use that money. Remember, those people who've built empires, who've actually built a much better life, they've actually relied on debt, but they know how to use that money. So today I'll just discuss some points, and those are not all the points that you need to consider when it comes to debt, but they're key points that actually you need to think through. All right, so welcome once again, and let me just display some slides in a moment. All right, here we go. A debt-free life. Don't we all want this? And if we can achieve this, then I'm telling you, you are on the right path to living that fabulous lifestyle that we keep talking about every Sunday. Okay, so let's get into it right away. Signs of poor money management, okay? Because if you don't manage your money well and you're already in debt, things can only get worse. So let's first look at some of them and what you can do about them. Dealing with debt can be troubling, but it can also be exciting if that debt is actually serving you and it goes to what it was intended to do. Then the leading cause of financial stress can be debt. Because sometimes perhaps you've taken a loan, you've purchased perhaps a home where you live with your family, and now you don't have any source of income. It can actually bring some, bad stress, believe you me. And learning how to manage debt is an important part of financial management. And in fact, this particular topic, I must say that after you watch this brief, video that has some good points for you, it's good to go and search more as how you can manage debt. All right, but I'll give you some important points that you can consider, and perhaps they'll work for you. Even small debt can spiral out of control if left unchecked. Very, very important. There was a time I had a bill to pay. It was 2,000 Kenya shillings, about $20, and somehow I forgot it. And it actually grew to something big. But eventually, anyway, when it came up, when I remembered, it was several months down the line, I paid plus penalties. Yeah, we all get into these problems, all right? A $20 debt that grew into some significant amount. So even those small things that you sometimes ignore can actually multiply into something bigger, and you wonder what actually happened. So we'll have some strategies on how you can manage debt so that you don't forget. And just in another slide, just wait a minute, we get there. So the other point is that double your effort towards repaying debt. Yes, if you get a windfall somewhere along the way and you already have a bank loan or you owe someone some money, please try and pay a lump sum. That actually even reduces the interest on that loan. And it, when you repay faster, it releases you, and this stress will get out of your way, all right? This will stabilize your money matters and work towards a debt-free life, and prioritize your debt prepayment, but do not forget your monthly savings goals and budget. Well, the last point is talking about, when we're speaking about managing your money, where debt comes in is as a priority. So always list your debts first, pay them off, and then you can go into investments and savings thereafter. So what are the steps towards a debt-free life? There's some simple steps for working towards a debt-free life. Number one is make a list of all your debts and acknowledge them. Ask for help in collecting them, and remember to include the type of debt, total owed, monthly repayments, due dates, payable interest rates, and then keep updating the list as you go along. This is a live document that you keep there. So if you do not have a list of money that you owe people or a list of debts, my advice is that just take a pen and paper and just start summarizing in there. Start with the bank loans, then go to friends and relatives, then go to your mobile loans, go to online if you have ever borrowed anywhere online, and list all of them. Actually make a table with these particular columns, right? The type of debt, the total owed, monthly repayments, due dates, and payable interest rates, because the interest rates are very key in prioritizing, especially when you get a lot of money. You'd rather pay the loans that have a higher interest rate, because you're definitely going to pay more in the long run for the loan that has a high interest rate. So you prioritize those ones. Or those ones that are just about to end and you can just get one lump sum and just clear it 100%. You can also prioritize those ones as well. The other one is make payments on time to avoid penalties. Small penalties in the bank can actually result to huge repayment amount. You might even end up paying twice. Yeah, if you had borrowed $5,000, you might end up paying $10,000 because of these penalties that you had actually forgotten. All right. If you keep forgetting to pay and keep paying late, even your credit cards, you need to include on this particular list, right? Then automate payments of bills, especially those with fixed amounts, to ensure you do not miss the due dates. Exactly. If it's a credit card, if it's a loan from a bank, if it's even mobile banking loans, whatever loans that you have, it's good to ensure that you have automated or the repayment, because your lenders can actually advise you how you can do that, because it varies from institution to institution that has loaned you the money. So just keep having conversations with those institutions to ensure that you are on top of things. The other one is that mark the calendar with payment dates or due dates and nature of payment, especially those that do not have fixed amounts. It is, yes. So if you go to your calendar and you always pay your credit card maybe on 20th of every month, there's a credit card repayment, and then you put it there. Then the loan, if it's a home loan or it's a secured loan, whatever it is, then put all those loans with their titles in your calendar, and make sure that you put an alert so that you're reminded when you can repay them. This gives a clear overview of your debts and when they are due. Then always make the minimum payment. You can consider paying more per month if possible. Then account can go into default if not attended to carefully. So be very cautious when you're repaying your loans, because yes, at a minimum, just make sure that you repay the minimum payment. If they say you'll be paying $1,000 every month, just make sure you pay 1,000. But the day you get some more money, you can even pay 1,500 for that month. That helps in actually reducing those interest. The interest rates can be pretty high. And in fact, I want to give you an example right now so that we can just have a view of how much you end up paying at the end of the day. As much as you think that your monthly repayment is so little, so how much do you pay by the end of the day? Just give me a moment, I finish this particular slide, and then I'll give you that demonstration. Prioritize debt repayment. Pick most important debts, i.e. prioritize the ones with highest interest rate, e.g. credit cards, and then alternatively clear the debt with lowest outstanding amount. I actually had mentioned this in earlier. So if there is a lowest outstanding amount, just clear that quickly. Alternatively, if all these loans are going to mature at the same time, then pick the one with the highest interest rate, because that is the one that is actually going to eat spot, to take most of your money. Then use a monthly budget. Allocate debt in your budget. Yes, we talked about budgeting, so debt must be a priority in your budget document. All right. Then get help where needed. If possible, actually go to a financial advisor. Not financial advisors that just give themselves titles. You got to really scrutinize if someone has experience. Some people just give themselves titles. So debt settlement, debt consolidation, and bankruptcy. But the financial advisor may advise you to settle the debts as quickly as possible. But if you do not have the money, you can do some debt consolidation. In fact, in 2020, a lot of banks helped, clients consolidate some of those debts, and in fact, even prolong the period of repayment and then lower the monthly repayment amount. And this really helped a lot of banks survive in 2020 and even part of 2021. It's still happening. So before you think about bankruptcy, try and speak to your lender, or your financial advisor. You go to the bank, speak to your relationship manager, find out how can you, turn around this issue. They're human, actually. They can actually give you some good advice, and you'll be surprised that, it's good you ask for that help. Don't die with these things when they're getting out of the way. If, let's say, you are unwell for some time, you could not even get an income, the business didn't even run at that period of time, you're back to work, your loans are not actually, you've been penalized quite a bit if they are not paid when you're away, you just explain yourself, just say you're unwell, be open, and then, so anybody can get into problems. So don't worry, debt can be good, can be bad, and it can sort you out. And you may need to rely on your emergency fund if things just get out of hand. Remember, we talked about an emergency fund? Always remember, just tuck in some money somewhere. That doesn't mean that it will be helping anybody else. That is for you and your family, all right? So it's very, very important to ensure that you manage your debt very well. Those are just a few points I've given you. And before we close, I want to give you a demo on just to have a view of how debt works, all right? Just 1 second. Look at this document here, all right? This is a loan amortization or a simple loan calculator. Assume your loan amount that you've taken is 2 million. It could be 2 million pounds or $2 million. And assume your interest rate. Like, for example, in Kenya, the loans interest rates are around 13.5 or sometimes 12. And assume that your repayment is 10 years. And the start date is the 1st of January, 2022. So once you put that amount here, this calculator will definitely calculate for you everything. I want you to look at this. You will be repaying 15,227. So if this was in Kenya shillings, it's very little money, 15,227 per month. No, it should not be that. It should actually be 30,454.86 actually here. That's what you should be paying every month for the next 10 years. 10 years times 12 is 120 months, right? So what happens? The total amount you will pay is 1.654 million. And that as interest. And the total amount will be 3.654582 million. So can you see the total interest is 1.6 and the loan you had taken was only 2 million? So you're almost paying almost double. So if you take this 2 million and you're going to invest it, whatever you invest it on, make sure the returns within 10 years will be double, which will have multiplied by 2. As at a minimum, at least you will have made like 4 million, because at the end of the day, you will have paid the bank 3.6 million of that loan. So if that loan was actually not directed to the right things and whatever business you're doing is actually not profitable, you can see at the end of the day, after the 10 years, you'll have paid much more. What if then there were penalties because you missed some repayments? What if, yes, you didn't pay after some time and actually you missed some months? So this will almost go into another 2 million, right? So just to take care of those, risks along the way, just make sure the money that you have taken from a bank is actually going to double itself within 10 years. We'll talk about how to double income and all that, but this is just a rough idea on how it works. So this is just a breakdown for the 10 years and how much you'll be paying and the balance. So you have the beginning, the payment, the principal, interest, and the end balance. So this is how the loan amortization sheet works. And always remember, based on the interest rate, you are able to see how much total interest at the end of the 10 years will be like. It's quite almost the same amount that you borrowed. So be very careful with when it comes to debt. You've got to invest it wisely, all right? So let's continue with the slides. Okay, on this one, so this is where we were. Okay, so finally, which are the top 3 things that you want to start doing to improve your debt? Yeah, or your life using debt? Because debt is not bad so long as you make wise decisions on how you use it. But it can be very bad because if you don't know how to manage your debt. So you just need to figure out what you're going to start doing, what you're going to stop doing, what you're going to change so that you can live a debt-free lifestyle. And this definitely will enhance your life. All right, so thank you so much for listening in. This was a short video and I'm happy that you have actually gotten some, good points here that you can work with. So let me know in the comments below. And if you have not subscribed, please subscribe so that you can watch more videos that are coming up. In a short while, actually, we'll be talking about how you can double your money. That's a nice video you need to just keep looking around. It is coming. Okay, goodbye for now.